Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, June the 18th, the year's 2023. Let's talk trading. Weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. And a friendly reminder, risk management. Never lose more than you're willing to lose on any one particular trade. So let's take a quick look at the weekly. As you can see here from the dashboard, all the open gaps have filled. The pound gap down. In fact, most pairs gap down, but it ran up and it's coming back down at the moment. As you can see, we're just a couple of points under the weekly open. 24 off the high and 3 off the low. But what's really interesting is when we look at the month, as we saw on Friday, we have now broken out and put in new yearly highs. And we're now putting in the opening range for the week. Once again, new yearly high at 128.47. And we're 724 pips above that yearly open. So we'll see if there's any more range left in this month. As far as inside bars, only a handful of inside bar action at the moment. As far as range goes, it's interesting. We're 8 hours into the trading day, and we have 4 pairs over 100. And it looks like it happens to be New Zealand and Aussie pairs. Except for the New Zealand dollar, US dollar, it's only 31. But the Euro AUD, Euro NZD, Pound Aussie, and Pound New Zealand. So for some reason, those pairs had a lot of action today. And here we are once again crossing below that weekly open. In fact, I had a trader comment. He thought maybe I've reversed and gotten complicated because I used some hashtags for like smart money and order block. But as I explained to him, I replied and I said, no, I'm still all about horizontal lines. If you've been watching my videos, you would know that. And I just mainly did that so I might catch the attention of some of those traders, and they might say, hey, you know what? There is a simple way, as opposed to, you know, a bunch of jargon-laced strategies where the more confusing or complex it sounds, the more people flock. And it's like I mentioned over a decade ago. You know, this is the buy zone. This is pretty much where what I started with, or when I started my journey leaving the squigglies behind and all the complex stuff behind. I started with the buy zone. But as I said, if I were to walk into a room and, you know, try and charge somebody $500 or $5,000 for this method, and go up to the front of the room and hand them a single sheet of paper explaining how this works, and then after talking for about 10 or 15 minutes, then saying any questions, most people would go, we want our money back. But the thing is, it works. It works every day. It's not complicated. You can see right here, price hit the line, you buy, you make money. Price crosses below. This is the short zone. Or you could trade the open. Price crosses below. You take the trade and short, and then you take your money. And that's just the way it works. You know, a lot of people go, oh, there's a bunch of whipsaw, you get cut up, blah, blah, blah. That's all it is blah, blah, blah. I mean, the thing about any method is the method's not what is profitable. The method only gives you a chance to be profitable. It's up to the trader to be profitable because you can, you know, as the turtles proved, you can show 100 different traders or 50 different traders the same method, teach them the same thing at the exact same time. Some will be profitable, some will be very profitable, and some won't be able, you know, to trade their way out of a wet paper bag. So, um, you know, all that, I'm just talking because I just don't want anybody to think that I've, you know, switched over to the dark side or anything, or reversed this walking away from horizontal lines or simplicity. Because with, you know, a couple of exceptions, the things that I do all rely on horizontal lines. I mean, once again, the rat zone, trading off the daily high, current daily high, current daily low. Well, right now the range is too low to be doing that. But once again, it works every single day. No exception. I mean, unless the range is too low, and that's just a warning, caution. You know, the pivots, you know, you can draw a horizontal line at the pivot and fade the pivot. So here Bambino says to go long, and it says if you're near the pivot point, bias is long. And I think we are somewhere near the pivot point right there. And near S1, the bias is long. There's the weekly pivot down there. So let's just take a quick look. Okay, we've hit the pivot today, so because that's gone. Missed pivot from yesterday and missed pivot from Friday, missed pivot from Wednesday. So we'll just see what happens if they get taken out or not. Weekly, haven't taken out that pivot yet, down at 27.18, and the month's already been taken out. And just for giggles, okay, so 27.37, there's a H4 pivot that got missed, and there's one down here. In fact, we've got a whole bunch that have been missed this month. It's like maybe we'll see if we'll get to take those out. Once again, the wick zone. You know, statistics, you know, price just doesn't like staying in the wick zone. What more can I say? Horizontal lines. No squigglies are harmed. So I'm not really sure. Like I said, I don't think that trader's been watching my videos making a statement like that. Maybe he just saw the hashtags and that's what led him to believe something different. I mean, yes, I wrote some order block indicators and balance indicators because I was kind of curious just to see. But the thing is, those are also horizontal lines. So if I can see something is really a horizontal line, then yeah, I'm curious about it, see if it has any merit. So last week, 361 pips of range, the 91 percentile, a nice mover after, you know, the anemic period here. So we'll see what happens this week. Once again, more horizontal lines, previous H1 high-low, previous and current day high-lows. Simple stuff. Trading with the candle color at the line, even though I've kind of switched over to using the M30. One of the reasons is because of the how for some reason on M30 price likes to cover, and what I mean by cover is the high of this candle is above the top of this one, and the low of this one is below the bottom of this one. So we've got the high the top, the bottom, and the low. So this usually covers. So you see it covered here, it covered here, didn't cover here. You see it covered here, wasn't much to cover. This one did not cover. So that's one of the reasons why, because there's a tendency, and it's a little bit better than 50% if I remember correctly. I'd have to rerun the stats. But the H or the M30 candle is the one that covers the most. So that's just something to watch. So if you're trading using M30 and you see it crossing a line, you just go with that candle color. So that's a refinement from the old rule of thumb, don't trade against the H1. So now it's don't trade against the M30. Okay, lower high, higher low. Once again, simple horizontal lines. You can see here we had a lower high, price came down, crossed above it, did it again, for only a couple of pips. But as you can see here, we're kind of range bound here. But still, if all you're looking to make is a couple of pips, there they are. But once again, really simple horizontal line trading. Now, let's take a look here. Range by month, we're at 480. We haven't extended that range. So the numbers from Friday still hold. But if you didn't get to see that video, the important number to see is year-to-date accumulated range. You can see we're over 1,000 pips so far. So, and the other number you can either look at the ATR, but ATR percentage actually tells you a little bit better, where it's 76% of the ATR of the month. So there's still possible 24 pips, and seeing that January and March were the only 2 months above 90 so far this year. You can see what happened last year, some huge moves. So we'll just have to wait and see for the rest of the month. And looking at the trade reminder here, let's see, for the month, prices above the upper wick zone still. We're way above the monthly open. Distance to the EMA 5. It's 319 pips. That's just way above it. Buyer strong control above the previous mid. We crossed above the previous mid, above the pivot, crossed above the pivot. So there, looking at the weekly, way above the EMA. We're just a few pips above the open. We're prices between the wick zones, which means it's inside the body. Fade the pivot sell. Right now we've got all green here. We take a look at the daily. Lower high, higher low. So inside bar so far. Slightly above the open. So we'll just have to wait and see how this plays out. So, fellow traders, I hope you had a fun and safe weekend, and I'm going to wish you a profitable week, profitable day, profitable month, profitable year. And as always, if you've got some questions, feel free to ask. And the better the question, the better the answer, right? So, when you're trading, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.